Hi, I'm Scott Starratt with Starratt Wealth Management, a part of Canaccord Genuity Wealth Management. So Liberation Day was last week, and so far the only liberation has been the money from the stock markets. The reality is that the tariff decision is equally panned across the entire world, except maybe for the people that believe in the United States, in Donald Trump's administration, that this is a great idea. So how did that affect markets? Well, before I hit that, I wanted to deal with three different things in this special video. The first one is the actual tariff decision itself, the second being the market reaction, and the third being what the portfolio and model outlook is for all of you. So when it comes to the tariff decision, we could talk about many, many, many different aspects of it and what the intent is and what's going to end up happening. But I think the most glaring thing that showed for me was when Donald Trump was inaugurated on January 20th. One of the things that he announced and signed an executive order on at that point was that him and his team were going to take a really, really hard look at the tariffs, tariffs that were issued from other countries. But that was going to include everything from tax rates to other aspects of what they call cheating, to looking at things from the standpoint of, are there other barriers that are put up that might not be tariff related but are still barriers, special deals in certain industries in different countries, things like that. The shocking thing was that when the tariffs were announced, the White House came out with the actual formula that was used in order to determine what the tariffs were going to be. And without getting too much into weeds, for simplicity's sake, what they ended up announcing was a formula that basically took the trade deficit and divided it by the imports of the countries, and then divided that by two, added a couple of Greek letters that offset each other, and called it a day. Now, this simplistic formula does not bring into consideration any of these issues that Donald Trump had wanted to be dealt with, and instead just looked at things in a blanket way that is not really prudent at all, in my opinion. Now, the good thing about, I guess the only good thing about last Wednesday is that Canada was spared any further tariffs. Now, our existing tariffs that we do have are still in place, but there were no additional, I don't even want to call them reciprocal tariffs because they weren't very reciprocal, but any extra tariffs. So what was the market reaction? So up until this last Friday, the S&P is now down 17.5% from its peak in February. Um, Over the last few days, including all day Friday, essentially, we talked to all of our managers. This morning, so far as I'm talking here, the market is down again, although not quite at the lows of what it was overnight. It is still quite red, and so it's going to be another challenging day for the markets. Um, the interesting thing that a lot of our portfolio managers brought up is even though things are going straight down, it's a very orderly transition. There's no panic. One of the ways that you can determine whether there's panic is how the bond market is appearing. You know, are people able to go get credit? If you recall back in 2020, there was with the COVID, there was a real concern around whether there was going to be, credit was going to dry up and whether people could actually get money or borrow money. Even before that in 2008, that really hit where companies as big as Coca-Cola weren't sure that they could roll over their month over month kind of borrowings. And so that was a real credit issue, and that caused a bigger problem. Now we aren't seeing that. According to our managers, which is a good thing. It means it's orderly, that there's no panic. It also means, however, that there's no capitulation yet. And what I mean by that is traditionally, a lot of market bottoms have occurred when people just throw in the towel. And sometimes that happens because there's an event, like a big company going broke, like in 2008 with Lehman Brothers and a bunch of banks. Sometimes it will happen like in March of 2020, April 2020, when the central banks throughout the world and governments started throwing a whole bunch of money and printing money to solve the issue. Right now, as it stands, Thursday and Friday, the S&P was down about 10.5%, the most since March 2020. And so over the weekend, there was an expectation of one of three things going to happen. One, everything stays stable. Number two is the Trump administration to change their tone a little bit and to give markets hope. Or number three was for the administration to double down. And that's essentially what happened is the talking heads came out on the Sunday shows and basically said everything's great, don't panic, America's going to be great again. So what does all this mean for us? If you recall, and I've said it over and over again, we took money off the table in October, sorry, in the winter, early winter, so November, December. We kept that money in cash and in our defense bucket. We have lots of liquidity. We have the ability to buy at some point and take advantage of this volatility. I don't think now is the point, but that could change hour by hour. And so we're continuing to watch our managers. Like I said, I spent all weekend going through our returns with our managers, and everybody is acting as expected. Nobody is doing a lot better. I shouldn't say that. There's a couple that surprised me on the upside, but nobody's doing exceedingly better, like a positive number or anything like that. But nobody is being a disaster either. So that's all very positive. Our feeling is that we don't want to react right now and try to pick the market bottom, i.e., try to catch a falling knife. I don't think that's prudent. I also don't want to guess, as Tony Dwyer, who is Canaccord's chief strategist, mentioned a year and a half ago. I don't want to be risking your money on a thought or on a bet. And so therefore we're going to wait until the data really comes through and shows that maybe we have stabilized here. This is going to be a long process. Like I said, we're going to look for an entry point sometime in the future to take advantage of things, but it is going to be a longer process. And at some point, we're going to have some news out of the U.S. regarding what the next steps are, whether they're going to reverse some tariffs, extend some, double down on some, who knows. For right now, it's we do feel our models are performing well. We do have a plan. Our plan, like I said, is that to take advantage of this, and we want to make sure that we're able to protect all of our investments as much as we can. Jim, Scott, Angela, and Alex are around. If you do want to chat with us, get an update, either by email, phone, just give us a shout or send us an email and we can call back. Definitely a trying time, but one that we are very, very confident we come back from. We've seen this many times before. The big event for me was back in 1998. We saw it again in 2000, saw it again in 2008, saw it again in 2020. Markets do always come back. We never know the time of how fast they're going to come back, but they always do come back. And like I said, as long as we don't have an issue that is terminal, meaning a stock that goes broke. Not that we own any stocks, but something like that happens, then we're in a situation where everything's going to be a positive over the next little bit. So again, reach out if you do have any questions. In the meantime, we'll communicate with you via email or on a phone call or in videos like this.